right? This is not a coincidence that the Fed keeps easing, causing inflation, printing money, and the price of gold goes up. Now, the question is, how much higher is this easing cycle going to send the price of gold? Because I think this one is going to be the big one. I think we've been building up, right, like a crescendo. So let me get back to today's podcast. I started talking about gold and the fact that gold hit a new record high pretty much every day this week. And it closed at a new closing high for a day, for a week. Gold closed, I believe the settlement price was $2,578, although that could change. You know, I'm recording this about 5 o'clock East Coast time, so sometimes they end up changing the price a bit. But that was where it was the last that I looked. The high of the day, intraday, that I saw was 2,583, maybe a little bit above that. So that is the new all-time record high for the price of gold. Gold is now up 25% on the year. That's a big year, and the year's not even over yet. Now, let's contrast that to what's going on in the stock market, because a lot of people are talking about, you know, stock market's really strong, and it has been strong if you measure it in dollars, U.S. paper currency. So the Dow was up 2.1% on the week. Now, if you just heard that, oh, that's a good week. Dow was up 2.1%. Gold was up 3.2%. So that means in terms of gold, priced in gold, the Dow was down. Even the S&P, which rose 3.1% on the week. In gold terms, it was actually lower. Now, year to date, the Dow is up 9.75%. That pales in comparison to 25%. The Dow is getting crushed this year, priced in gold. Now, the S&P is holding up a little bit better. It's up 18.6% on the year, but it's still down in terms of gold. NASDAQ was up 4.75% on the week. So the NASDAQ beat gold on the week, but it's not beating it on the year. Even with all the Mag 7 stocks and NVIDIA, the NASDAQ is up about 19.8% on the year. Still down in terms of gold. And the Russell 2000 also had a good week, up 3.9%. So it edged out gold's 3.2%. But year to date, the Russell 2000 is only up 8.4%. It's getting demolished in terms of gold. The only thing that's beating gold, really, as a group, are the gold mining stocks, but they're not beating it by much. Now, finally, today, GDX and GDXJ finally made new 52-week highs. Even though gold was hitting record highs earlier in the week, these indexes still hadn't caught up. So it took today, right? We had to take out the old high for gold by more than $50 before gold got back to where it was 3 weeks ago, when gold was $50 lower. But the GDX was up 9.3% on the week. And the GDXJ, the juniors, that was up 13.6%. 13.6% on the week and 31.6% on the year. Now, you might think, well, that's a good return. These stocks are up 31% on the year. Not with gold up 25%. With gold up 25%, these stocks should be up at least 50, if not 75%. The reason they're not up more is because investors have been nervous the whole way up. Everybody keeps expecting the price of gold to collapse. On my last podcast, I talked about the fact that 2,500 was probably the new floor, that we could go slightly below it. And I think the lowest we got, ever since we got above 2,500, the lowest we got was about 2,480. And here we are now $100 higher at 2,580. But when gold had a 1% decline from its highs, it went from 2,530 to like 2,480. Gold stocks got clobbered. The GDXJ was down 15%. And so this week, it recouped all of those losses. But the indexes are still extremely cheap. And I still think that people should be buying these stocks as fast as they can come Monday morning, regardless of where they are. Obviously, you need to be a speculator. There's risk in these stocks. But as far as I'm concerned, they may as well be giving them away in Cracker Jack boxes. That's how cheap they are. And gold still going up. Silver almost back to $31, above $30 today, up, percentage-wise. It was a bigger move than gold. Silver stocks, of course, are still well below their 52-week highs because even though gold made a new all-time high, silver didn't even make a new high from a few weeks ago or a month ago, wherever it hit that level. So silver is still the sleeper, and the silver stocks are very cheap. So over the weekend, you can go to Schiff Gold, as I've been saying. There's no reason to wait for a pullback because you're not going to get any significant pullbacks. I think the risk is that you're waiting for gold and silver to come down, and instead they go way up. And the reason they may go way up next week is the Fed's rate cut. And I've been saying for months now that I thought that they were going to cut 50 basis points. In fact, I thought they might have even done an emergency 50 basis point rate cut, but they didn't have to. The Bank of Japan helped out, plus the market started to discount a 50 basis point cut. In fact, the reason the markets were so weak last week, and the reason I titled that podcast that markets were on the brink of a collapse, was because the data that came out last week caused a lot of investors to think that we wouldn't get 50 basis points, that we're only going to get 25. And I think the market needs 50. In fact, they need more than 50. But the Fed needs to show the market that they're serious about cutting rates. And the markets don't want a mamby-pamby 25 basis point cut. They want 50, and they want to know that the Fed has got their back and that it's going to be doing more cuts. Now, this week, what happened is you had a lot of people coming out, even at the Fed, kind of indicating that 50 is still on the table and 50 wouldn't be unrealistic. In fact, a lot of people have come out, big people on Wall Street are now supporting, and they're behind this 50 basis point rate cut. And so I think that the Fed is going to deliver exactly what the market expects. In fact, if they don't get 50 now, if they end up with 25, we could get a big drop. In fact, one of the things that I was concerned about last Friday was the dollar breaking down against the yen. I thought it might break down below 142. And it did. Not only did it break below 142, it closed the week below 141. The dollar yen closed at 140.9. This is the lowest the dollar has been against the yen all year. And the dollar index also was down about 1% on the week. It still hasn't collapsed. It's still above 101. And the dollar is still weak, especially against the Swiss franc. It didn't crack 84 cents yet. I mean, that's going to be, I think, a key level. I think it closed around 84.9. We were lower, but dollar recovered a bit. But the dollar has been particularly weak against the Swiss franc. Remember, it's only about 7% above an all-time record low. But we got the weakness in the yen, but it didn't really cause any kind of significant selling in Japanese stocks. I mean, there was an initial maybe 2% drop on Sunday night, but the market kind of recovered. And so by the time we rolled around to our time zone, we were already on the recovery. And then we got all of this 50 basis point stuff that started to, rekindle the hopes that the Fed was going to do 50. And I think that is what caused the rally in the stock market, but it also caused the rally in gold. And this is something that's very significant too. We'll see where gold is, but gold's making record highs, and the Fed is about to start cutting interest rates. That's never happened. I mean, if you look at the last couple of rate cutting cycles, the most recent one started in 2019. July 31st, 2019, when the Fed cut rates. And then, of course, they eventually went to zero with COVID. But that first rate cut, gold was at $1,412. That was the price of gold, right? Over $1,000 an ounce lower than it is now. But that was still 26% below the record high. The record high was 1920. So gold was way off its highs before the Fed started cutting. If you go back to the cycle before that, which was the September 18th, 2007 cut that preceded the 08 financial crisis, but that was the first cut. At that time, gold was at $726 an ounce. It was 15% below its record high from 1980. So the Fed has never started a cutting cycle, at least in modern memory of these cuts, with gold at an all-time record high. And, it's not a coincidence. The first time the Fed started cutting in 2007, gold was 726. So I didn't look back when they started cutting in 2000, but then when the Fed started cutting in 2001 or after the dot-com bubble popped, gold was under 300, right? So when Greenspan first started cutting, right, you had gold under 300. And then when they had to cut rates again, leading up to the financial crisis, gold was 726. When they started the next easing cycle, it was 1412. And now they're starting another easing cycle with gold at 2600, right? This is not a coincidence that the Fed keeps easing, causing inflation, printing money, and the price of gold goes up. Now, the question is, how much higher is this easing cycle going to send the price of gold? Because I think this one is going to be the big one. I think we've been building up, right, like a crescendo, and now we're going to have this huge rally because this is going to be the most inflationary bout of monetary policy that we've seen. It may even be bigger than COVID, but it's certainly going to go on for longer than COVID. COVID was like, a shot in the arm, quick, right, a quick burst of money printing and spending. But this could go on for a much longer period of time. And so I don't think we're just going to see gold going to 5,000 as a result of this easing cycle. I think it's going to go much higher than that. I'm going to continue with this topic. Percent this week got clobbered last week. Oil closed the week at $68.30 a barrel. And this is the interesting point about oil. A lot of people are trying to blame inflation on oil, right? That high oil prices are why we've had inflation because oil prices have gone up. We're only comparing oil prices to where they were like coming out of COVID, right? When oil prices collapsed. In fact, they even went negative for a while during COVID. So oil was super cheap, but $68 a barrel is not expensive. In fact, historically, it's cheap. In fact, in terms of gold, you can buy 38 barrels of oil with 1 ounce of gold. The only time oil was this cheap in the history of oil, which goes back a long time, the only time oil was this cheap was during the COVID months, right? When it went negative, which is a complete aberration. But outside of those few months in early 2020, oil has never been cheaper than it is right now in terms of gold. But even in terms of dollars, at $68 a barrel, oil is cheaper today than it was 20 years ago. It's more than 50% below the high price from 2008. How many things can you buy today as a consumer that are cheaper than they were 20 years ago? Other than like a plasma TV or something like that, right? Something that's consumer electronics. Go to the supermarket, try to find something that's cheaper than it was 20 years ago. Oil is a bargain. It's cheap. That's why, when Donald Trump says his solution to inflation is drill, baby, drill, that's not going to do anything. Oil is not the problem. We're getting a bargain on oil. One of the reasons that the CPI is not up a lot more is because oil came down, right? Oil is masking what's going on. And in fact, if the Fed didn't create all this inflation, imagine how much cheaper a barrel of oil would be. But the other significant point that I'm trying to make is oil's not going to stay this cheap. Oil is going to have a huge rally, probably in 2025. And one of the reasons too that oil may be this cheap is because we dumped so much of our strategic petroleum reserve on the market. That's one of the reasons that oil got as cheap as it was. But that reserve is pretty much depleted, right? We're not going to be able to do that as an encore. And so imagine what's going to happen to the inflation numbers when oil really starts to rise, because that is going to happen. And what the catalyst is going to be for the next explosion in commodity prices, led by oil, I think, is going to be next week's rate cut. And the irony there is that the Fed is cutting rates supposedly because it's vanquished inflation, right? It's beaten inflation. It's coming down. It's on a glide path to 2%. And because they won the war against inflation, we can cut rates. Cutting the rates actually is the catalyst for a surge in inflation. So the very victory celebration is what causes defeat, although they lost anyway. But there's the irony of the whole thing. And that is what the markets don't understand, is that we're going to get this huge pop in inflation and we're going to get a recession, right? Right now, the markets are thinking we're not even going to have a recession, right? We're going to have a soft landing and inflation is coming back down to 2%. They're wrong on both. We're going to have a hard landing and inflation is going up. And so nobody is modeling that. Nobody is expecting that. Maybe gold is. I mean, gold is going up. Again, the rise in the price of gold is what shows you that the Fed is making a mistake, that any cut is a mistake, especially a 50 basis point cut, but they should be hiking interest rates. But no one is covering it. You know, on yesterday, gold made a new high on Thursday. I was watching CNBC. They didn't even talk about it. Then I watched this show, Fast Money, for an entire hour. And, you know, they didn't mention it once. The best performing sector, the GDXJ yesterday was up like 6%, over 6%. I mean, isn't that fast enough money for these guys? They didn't even mention it once. Not one guy mentioned gold or a gold stock. They went over sectors. In fact, early in the day, I was watching on CNBC, and the lady, whoever was, talking, said, let's go over the markets. Let's examine what's happening. Let's look at the movers of the day, the sectors that are going, the stocks that are going. And I know the biggest movers are the gold stocks. Didn't mention a single one of them, like as if they're not even stocks. And of course, didn't even mention the price of gold. This should be the biggest topic of conversation. Again, gold up 25% this year. It's beating all the stock market. So why not cover it? But more important than gold going up is why it's going up, what it portends, right? That the Fed is making a mistake. This is a harbinger of much higher inflation. And again, what is going to really complicate and compound the severity of this recession is that rates are going up. Because when inflation rears its head in a bigger way, it's going to not only make consumer prices go up, it's going to make long-term interest rates go up. And the Fed has not had to deal with this, right? They've had the luxury of having this sub 2% official inflation, and they've been able to stimulate the recessions with creating more inflation. And the bond market's cooperated. It's not going to happen this time. The vigilantes are coming back. Long-term rates are going to go up along with consumer prices. So it is going to be a brutal recession with no relief. And to the extent that the Fed tries to stimulate, which they will, the only thing that's going to be stimulated is inflation.